Wall Street. The very name evokes images of immense wealth, power, and relentless ambition. It is a place where fortunes are made and lost, where the fate of entire nations is decided. But few know the fascinating story of how this narrow street in Lower Manhattan rose to become the financial capital of the world. Our story begins in the 17th century, in the fledgling Dutch settlement of New Amsterdam. Back then, Wall Street was nothing more than a crude barricade, erected to protect the colonists from British invaders and Native American tribes. Little did those early settlers know that this humble barrier would one day become synonymous with the world of high finance. Over the next century, New Amsterdam would become New York, and the wall would come down. In its place, a bustling centre of commerce began to emerge, full of energy and potential. Merchants, traders, and financiers flocked to the area, drawn by the promise of opportunity and prosperity. The seeds of Wall Street, it seemed, had been sown, ready to grow into something monumental. The year was 1792, a pivotal moment in history. America had just won its independence after a long and arduous struggle, and the newly formed nation was eager to establish itself on the world stage. The young country was brimming with potential and ambition, ready to carve out its place among the global powers. Diplomats worked tirelessly to forge alliances, and merchants sought new opportunities in bustling port cities. In a small coffee house on Wall Street, a group of 24 stockbrokers gathered to discuss a matter of great importance: the creation of a formal market for buying and selling securities. This was no ordinary meeting. It was a gathering of visionaries who saw the future of American finance. Their agreement, signed beneath a buttonwood tree, would forever alter the course of financial history. This momentous occasion was marked by the signing of a simple yet profound document. This simple document, known as the Buttonwood Agreement, marked the birth of the New York Stock Exchange. It was a humble beginning, but one that laid the foundation for a financial revolution. Though modest in its beginnings, the NYSE would grow to become the world's largest and most influential stock exchange, a testament to the power and resilience of the American spirit. Over the years, it evolved, adapting to the changing times and expanding its reach. As the 19th century unfolded, the NYSE became a magnet for capital, attracting investors from all corners of the globe. It was a bustling hub of activity, where fortunes were made and lost, and where the pulse of the American economy could be felt. Railroads were built, industries boomed, and the American economy surged. The Industrial Revolution brought about unprecedented growth and innovation, transforming the nation into an economic powerhouse. At the heart of it all stood Wall Street, the engine driving the nation's unprecedented growth. It was more than just a street. It was a symbol of American ingenuity and determination, a place where dreams were realized and the future was shaped. Today, the New York Stock Exchange stands as a testament to the vision of those 24 stockbrokers who gathered in that small coffee house. It has grown into a global financial powerhouse, a beacon of economic strength and stability. The influence of the NYSE extends far beyond the borders of the United States, impacting financial markets around the world. It has become a cornerstone of the global economy, a place where capital flows freely and opportunities abound. As we look to the future, the seeds planted in 1792 continue to bear fruit, driving innovation and prosperity. The legacy of the Buttonwood Agreement lives on, inspiring new generations of investors and entrepreneurs to reach for the stars. The story of the New York Stock Exchange is a story of resilience, ambition, and the relentless pursuit of progress. It is a story that reminds us of the power of vision and the enduring strength of the American spirit. The late 19th and early 20th centuries witnessed an era of unparalleled industrial expansion in the United States. Steel, oil, railroads and manufacturing industries flourished, propelling the nation into the forefront of the global economy. And as America's industrial might grew, so too did the power and influence of Wall Street. The titans of industry, men like Andrew Carnegie, John D. Rockefeller and J.P. Morgan, became synonymous with wealth and power. Their empires, built on steel, oil and finance, reshaped the American landscape and cemented Wall Street's status as a center of global capital. But this era of prosperity and growth would not last forever. The stock market, fueled by speculation and easy credit, had soared to unsustainable heights. A reckoning was inevitable, and when it arrived, the consequences would be devastating. Section 4. The Crash of '29, a nation reeling, a market in ruins. The year 1929 is seared into the memory of a generation. It was a time of unprecedented economic growth, where the stock market seemed to be an endless source of wealth. People from all walks of life invested their savings, hoping to strike it rich. On October 29th, Black Tuesday, the stock market crashed, plunging the nation into the Great Depression. The sudden and catastrophic collapse wiped out fortunes overnight, leaving investors in shock and disbelief. Years of reckless speculation and unchecked greed had finally caught up with Wall Street, and the consequences were dire. The market had been driven to unsustainable heights by a frenzy of buying on margin, where investors borrowed money to purchase stocks, betting on continued growth. Millions of Americans lost their life savings, businesses collapsed, and unemployment soared. The ripple effects of the crash were felt across the country as banks failed and credit dried up, leading to widespread economic hardship. For many, the American dream was shattered, replaced by a harsh reality of breadlines and soup kitchens. Families who had once enjoyed prosperity now struggled to put food on the table, and the social fabric of the nation was strained to its breaking point. The once bustling trading floors of Wall Street fell silent, a stark reminder of the market's fickle nature. The optimism and exuberance that had characterized the Roaring Twenties were replaced by fear and uncertainty. The Great Depression left an indelible mark on the American psyche, and it would be years before the economy fully recovered. The impact was not just economic, but also psychological, as people grappled with the loss of security and the erosion of trust in financial institutions. In the aftermath of the crash, Congress enacted sweeping reforms aimed at preventing a similar catastrophe from happening again. The New Deal, introduced by President Franklin D. Roosevelt, sought to provide relief, recovery and reform to a nation in crisis. The Securities and Exchange Commission, or SEC, was created to regulate the markets, and new laws were passed to curb speculation and restore public trust. These measures were designed to bring transparency and accountability to the financial system, ensuring that such a disaster would not be repeated. Wall Street, once a symbol of American prosperity, was now associated with recklessness and greed. The lessons of the crash of 1929 serve as a cautionary tale, reminding us of the dangers of unchecked speculation and the importance of responsible financial practices. Section 5. The Roaring '80s, Greed, Excess and Corporate Raiders. The 1980s were a transformative period for Wall Street, characterized by a dramatic shift in the financial landscape and a culture of unrestrained ambition. The decades following the Great Depression were marked by a period of relative stability and growth on Wall Street. The financial markets had recovered, and a sense of cautious optimism prevailed. The 1950s and 1960s saw a steady rise in stock prices, and the American economy was booming. This era was defined by prudent investment strategies and a focus on long-term growth. But the seeds of excess were sown once again in the 1980s as a new breed of financiers, driven by ambition and greed, emerged. The financial landscape began to change rapidly, with deregulation and new financial instruments creating opportunities for enormous profits. The culture of Wall Street shifted towards short-term gains and high-risk investments, with traders and financiers seeking to capitalize on the booming market. These were the corporate raiders, men like Carl Icahn and Ivan Boesky, who used junk bonds and hostile takeovers to reshape corporate America. They targeted undervalued companies, buying them out and often dismantling them for profit. This aggressive strategy led to significant changes in the corporate world, with many companies becoming vulnerable to takeovers. The use of junk bonds, high-yield but high-risk securities, became a hallmark of this era. The 1980s were a time of conspicuous consumption. epitomized by the greed is good mantra of Gordon Gekko, the fictional Wall Street tycoon from the movie Wall Street. This character became a symbol of the era's excesses, embodying the ruthless pursuit of wealth and power. The lifestyle of the financial elite was marked by opulence, with luxury cars, extravagant parties, and high-rise penthouses becoming the norm. The lines between ethical behavior and outright criminality became blurred as insider trading scandals rocked the financial world. High-profile cases, such as those involving Ivan Boesky and Michael Milken, highlighted the rampant corruption and unethical practices that had taken hold. These scandals led to increased scrutiny and regulatory changes, but the damage to Wall Street's reputation was significant. The excesses of the 1980s would eventually lead to another market crash, this time in 1987. Known as Black Monday, the crash saw the Dow Jones Industrial Average plummet by over 22% in a single day. The sudden and severe downturn sent shockwaves through the financial world, leading to widespread panic and significant financial losses. It was a stark reminder of the volatility and risks inherent in the financial markets. Although not as devastating as the crash of 1929, it served as a stark reminder that the ghosts of Wall Street's past were never truly laid to rest. The 1987 crash underscored the cyclical nature of financial markets and the dangers of unchecked greed and speculation. It prompted a re-evaluation of financial practices and regulations, aiming to prevent such a crisis from occurring again. Yet the lessons of the past often fade, and the allure of quick profits continues to drive the financial world.